We have with us Abneesh Roy, Executive Director at Novama Institutional Equities, and Akshay D'Souza from Bizom joining in on the show right now. Let's talk about Abneesh and Akshay. Thank you so much for joining in, firstly. Abneesh, if I could, kickstart the discussion with you. What is the indication that you are getting from companies in terms of demand? Because clearly, Unilever, Marico, Britannia, none of these seem to be having a problem, but clearly Dabur did. What is your own understanding of what's really happening with demand on ground, both urban as well as rural?
Sure, thanks. So firstly, yes, a lot of the companies in this quarter have seen double-digit volume growth. So if you see Godrej Consumer, if you see Asian Paints, Pidilite, all these have seen double-digit volume growth. Even for Nestle, the growth was strong. So yes, we are seeing that many companies have seen now worst of the rural slowdown behind. Urban continues to do well. So this is what we are seeing, that in staples, unlike say discretionary categories like QSR, apparel, innerwear, etc., footwear, etc., staples is not really seeing any big impact of the macro, say either job losses in the startups or very high interest rates impacting the discretionary part. Staples part in urban is decent and rural worst is behind. Now, companies like Dabur, of course, the rural salience is on the higher side versus, say, Nestle. That's why Nestle is doing better. But for Dabur, anyway, if you see, immunity portfolio was there in the base quarter because of the COVID wave 3. So that impacted. So my sense is even for Dabur, fruit juice business, for example, did really well. So parts of the business for Dabur did well. Parts did not do well. But overall, demand trends, what we are picking up, FY24 is looking like a good year because what will happen is because of the gross margin expansion, companies will flow back higher grammage. In every category, you have got 20 to 30%, even in some categories higher, LUPs. So last 2 years when very high commodity inflation happened, companies had taken price hike by cutting grammage. Now, because you will add back grammage in these lower unit packs, the volume growth will get strengthened because of this. So I would expect a more balanced growth in FY24 with less pricing growth, but volume growth, which is, I think, the more important parameter of demand, I think clearly it is picking up.
Akshay, would you concur with this assessment that the worst when it comes to the rural slowdown is now perhaps behind us? And, Abneesh did as well allude to the fact that we are seeing the gross margins picking up. Is that some sort of a trend that you're observing? And what exactly would this indicate?
Yeah, so I think before we get to that, I think an important factor to consider is that we are definitely seeing, inflation softening up a little bit, right? I think, and food inflation, importantly, is softening up. And when that happens, I think that ends up fueling consumption by itself. Now, that being the case, in Q4, especially, we did see, green shoots of rural demand kind of picking up back again. That's definitely been a trend. One of the things that we also see now from a company perspective is that input costs going down gives them flexibility to either be more competitive and playing on lower prices or increased damages, or it also allows you to be more profitable at the same point, which can essentially fuel back into the same business. So that definitely is a trend. In April, though, we did see a drop in sales in both urban and rural. Now, while we wouldn't read too much into it for most categories, it is definitely important to see it in perspective of the beverage category, where summer plays a very, very key role, right? I think more than half the business of beverage companies typically happen in the 4 months from March to June. And April being significantly lower than previous year is also driven a lot by temperatures, summer temperatures not being as high as last year. And last year, if you remember, it was record temperatures last year. So barring that one category, I think a lot of other categories in April are struggling with the overstocking that happened in the end of March, because a lot of Indian companies have financial year ends in March typically. So we saw a lot of stock dumping also taking place last month. But that being said, I think May is a month where you will essentially see the real consumption and growth kind of open up itself. And I would say what really seems to be indicators is rural, I would expect to start doing far, far better than what the April numbers indicated.
But Akshay, tell me, are you also seeing downscaling when it comes to spends? And what categories are most impacted as of now?
So we did this piece for the end of March, and we've seen that out of some of the 6 categories that we tracked, 4 of them actually saw pack sizes improving. So this is for the quarter ending March, which definitely did point to the fact that consumers were now opening up wallets, right? I think in an inflationary environment, everybody has very restricted spending. That seemed to have shifted in the last month. April, though, I would not really give worry so much about it simply because of overstocking in trade. It is just a cyclical thing, and I think you will see that kind of shifting in March. But we did see in March, the movement of trading up for a lot of categories that we have seen it tracked over there.
What about the outlook then, Abneesh, when it comes to a behemoth like Reliance Industries entering the FMCG space? They're going to be really big. They're talking about affordable FMCG products. How is this going to shake up the industry where there are well-established players who've been around for a long time?
Yeah, thanks. Yes, Reliance is a long-term concern. In FMCG, the incumbents don't really lose out market share from medium long term, because in the last 2 decades, we have seen multiple global players, even herbal players came into FMCG. A lot of D2C companies came, but if you see market share of any of the listed players in either 75% or 95% also, they're gaining market share, and in many categories, it is a 15-year high market share. So I would say that yes, Reliance is a concern more at the value end, and in every FMCG, we have got a lot of regional players who operate at that kind of a positioning for the customer in terms of low pricing but reasonable quality. I would say that Reliance is a bigger threat there. Second is, of course, distribution and brand equity that takes years and decades to really get there, because there is very limited shelf space in the Kirana shop. So yes, Reliance is a threat, but I would say that Reliance will focus more on the commoditized part of the FMCG, for example, rice, wheat, atta, etc. There's a very big market, and currently the organized market is very small. Of course, what is happening in the beverage segment, clearly Reliance is showing higher intent there, more aggression there. They have done a few acquisitions. So that is one space I think clearly Reliance is showing more intent. But here also, setting up Visi-Cooler, setting up the collection of bottles, manufacturing, etc. pan-India, I think it will take a lot of time. Plus the trust factor, brand equity, and the constant innovation, those things Reliance will have to demonstrate to get a reasonable market share in these categories over a longer time frame. So it's a long haul. It is not something like a geo moment. We don't see a geo moment in FMCG. The ball game is very different.
Okay, Abneesh, since that threat is off the table for now, at least, tell me what categories do you actually see recovery coming in fastest, especially when it comes to the rural end of the market?
Yes, so essentially wherever we have seen commodity deflation, those are the segments where, because of grammage addition, the volume growth will come back faster. So yes, biscuits, noodles, soaps, hair oils, these are some of the categories where FY24 should see rebound. So that's why even our topics, for example, in the staples space, Godrej Consumer, Britannia, Hindustan, Unilever, etc., we are quite positive on FY24 from a demand perspective and a more balanced growth and margin expansion. X of that, we continue to like ITC, and we also like Asian Paints, which is slightly in the discretionary segment.
Okay. Getting in your take then, Akshay, as to what your outlook is when it comes to which sectors or segments you believe are likely to do well within this space?
So we did see that some of these need products, so to speak, have had a very steady demand right through even whether inflation or even COVID. So to that extent, commodities and all have been very stable, right? The shift from unbranded to branded is real and is happening, and that's also a reason why a lot of large companies are actually moving into that whole branded commodity space. So you will see that moving disproportionately, simply because you are now going to be backed by very, very strong distribution muscle. Other than that, with softening of prices, I think one of all the discretionary categories will finally get a fillip this year, is what I think. So you can expect a strong rebound in categories of personal care and also in chocolates and confectionaries and in some of those discretionary product categories, which really didn't have a very very strong year last year. So I think we should watch out for these two major trends that will come up.
Abneesh, before we let you go, want to get a little bit stock specific as well in terms of what you believe looks interesting as fundamental ideas within the FMCG space basis all that you've shared with us?
Sure. So in our model consumer portfolio, which we run, ITC, Godrej Consumer, Britannia, and HUL are there. Apart from this, given such strong numbers by Asian Paints and Nestle, we also like those companies. And the common theme is essentially strong market share gains, commodity deflation helping in terms of the volume growth also coming back. So these would be the ones which we like. One risk for the entire sector will be essentially the El Nino, which we should not ignore. We have studied the last 20 years of El Nino. It is not that El Nino necessarily means that there is a big impact on the FMCG volume. There are many other things, but we need to monitor. This year being election year, we would expect stimulus programs from the central government, even maybe the state governments to be on the higher side. So yes, that is something which we'll be monitoring. But overall, ITC, Godrej Consumer, Britannia, HUL, Asian Paints, and Nestle. These would be the names which are still looking interesting. Valuations are not cheap, but yeah, earning momentum will be strong in FY24.
All right. Good to have you both on board. Thanks very much for giving us a clearer picture as to what the trends could look like when it comes to the FMCG space.